This is Agritalk Africa, the podcast that puts farmers first.
Good day, dear viewers, and welcome to yet another exciting edition of the Agritalk Podcast. My name is Tionge Kacheche, and I am your host. The Agritalk Podcast brings together industry leaders, policymakers, innovators, and experts to discuss issues shaping Zambia's agriculture sector, from production and agribusiness to finance, markets, technology, and everything across the agricultural value chain. Today, we are honored to be joined by an exceptional guest. This is Miss Mary Mumba, Chief Executive Officer of the Zambia Credit Guarantee Scheme. Madam, thank you so much for taking time off your busy schedule to just interact with us today and also enlighten the viewers. You are welcome to the AgriTalk podcast.
Thank you so much. Good day, viewers.
Thank you so much. So to begin with our opening question, so Madam, access to finance remains one of the biggest conversations among farmers as well as SMEs. Many people have good business ideas, but turning those ideas into thriving businesses often depends on access to capital. To begin our conversation, why is it still so difficult for farmers or SMEs in Zambia to access a loan today?
Thank you. Thank you so much. To begin with, the agribusiness is one of the upcoming sectors where most financial institutions would want to go into. But then you ask why it's difficult for farmers to have access. Sometimes farmers also have that perception that when I go to a bank, I might not be able to get a loan because the bank is going to ask for collateral and things like that. But then much as that also is very important, I think the farmers need to understand that banks look at a lot of things before looking at facilitating access to any of their loan products. They look at the viability of what the farmer is doing, and also the capacity to pay that particular facility they want to access. And so what makes it very difficult is that each one has, like, they have a perception that they'll not be able to get a loan, mainly because of collateral issues. I think that's what I can say.
So it's mainly collateral issues. And you've highlighted some of the challenges, one of them collateral issues. I think this raises another question. So if banks have money, why are productive businesses still struggling to access financing?
Like I earlier said, banks look at a number of things before giving any client, be it an SME or a farmer, a loan. Firstly, they need to have a bankable business. And that business should really prove to the bank that if they are given that credit facility, they'll be able to pay back the loan. So they'll look at how active their accounts are in terms of whatever deposits they put in their account, because that helps with assessment in terms of capacity to pay. And then also they'll of course look at security, because there has to be a buy-in, as in what is the particular client bringing on board to participate in that particular transaction. Because when there's ownership, it's easy for anybody who borrows to make an effort to pay. So money is there, yes, but you have to earn it to be able to get that particular facility. You need to prove to the banks that you've got capacity to pay back.
Okay, and many people have different perceptions about why funding is difficult to obtain. From your experience, what is the biggest misunderstanding people have about getting funding here in Zambia?
The biggest fear I've observed is that, like those that have security, for instance, the fear is that if I borrow, they're going to grab my house, they're going to grab whatever I've given as security. But then that's the whole idea. If you don't pay back, the bank will foreclose on whatever you've offered as security. So there's that perception and fear that if I go to a bank, they will ask for security, and any point in time they'll be able to grab my property. So mainly that's just a perception issue, because I mean, if you borrow and have intentions to pay, then your collateral is safe with the financial institutions. The onus is the borrowers to be able to pay back the loan, so that their security or whatever they've pledged as collateral is safe with them.
Okay, great. And now that we've looked at the challenges, let's help our viewers understand the solution your institution provides. So in simple terms, what exactly does a credit guarantee scheme do?
Thank you. The Credit Guarantee Scheme is government-owned, and it was a deliberate policy to come up with this agency to support SMEs have access to finance, and mainly SMEs that have got challenges with collateral. So we guarantee loans that are given by banks, more like de-risking the facility. And so we come in when a financial institution wants to lend to an SME and guarantee those facilities. We work mainly with financial institutions, and we don't deal directly with the SMEs. Reasons being that the SMEs, the banks are the ones that know these SMEs. They are their clients. So they'll do the underwriting, they'll do everything in terms of assessment. And if they see that that particular facility is viable, and the challenge that that particular client has is security, then they come to us. So that then we work together with the banks to see to what extent we can guarantee that particular facility, because it's phased. We can guarantee from 50 to about 80%, depending on the risk profile for that particular client. So mainly, in a nutshell, that's the role that we play. We guarantee loans to SMEs.
That's a very helpful explanation. But then, one thing many people may still wonder, how does your institution reduce risk for banks while still supporting borrowers?
This is a risk shared model, and when we partner with these banks, what we do is that we reduce the risks in the sense that the bank will take on a small portion, and as a guarantee scheme, we take on another portion, so that that particular SME can be supported. What that does is that the banks now can freely lend to those particular clients, which normally they would not lend to because of their risk profile and also inability to provide credit. So that's how we de-risk and facilitate support to those SMEs. And the banks, at least it gives them that leeway to see which sectors they can go into to diversify their portfolio.
Amazing. That's also another helpful explanation. So now, once somebody or someone decides to apply for financing, there's usually a behind the scenes. What would you say actually happens behind the scenes when an SME applies for funding?
So when an SME applies for funding, they go to their respective banks, and these banks should have been in partnership with ourselves. And currently, almost all commercial banks and a few microfinance institutions are our partners. So when they go to those banks, the bank will assess the viability of the business, and then once they do that and they find that the client actually has a business that can be supported, and then they come to us. We also do a high-level review and assessment and see whether we can guarantee that particular facility, and also agree to what extent. Are we guaranteeing 50%, 60 or 80%? It's dependent also on what the bank's recommendation is, and also the assessment in terms of how far we can go to guarantee. So behind the scenes, we just do that high-level review. The client will not even know that we're looking at their facility, because this is an advised guarantee. We avoid moral hazard, so we will not deal with the clients. The fear is that at the moment they know that the facility is being guaranteed, the chances of default are high, and that is what we're trying to avoid, so that we safeguard the fund and also ensure that a lot more SMEs can have access through the guarantee scheme.
Amazing, amazing. So now we go to reality and challenges. We just talk about the practical realities businesses face when seeking finance. So what would you say is the most common reason good businesses fail to secure funding?
Many a time, I think I've said a few things earlier, many a time is record keeping, and also not utilizing their accounts, because you find that somebody has an account with a particular bank. They'll do these transactions outside the banking system. What that does is that the bank will not know that you're doing any business, because transactions are not going through your account. So it's very difficult for a bank to do any assessment if the transactions are not visible in your account. So it's advisable that every business, be it an SME, in agriculture or anything, trade, tourism, whatever businesses you're doing, whatever little that you're making, no matter how small, let it go through the banking system. That way it will show the particular bank that yes, this particular client at least has a business. and we are seeing transactions trickling into the account. It doesn't matter how much, because based on those transactions, it will be easier for the bank to assess how far can they go in trying to help you build your business. But this, if there's completely nothing, it becomes a challenge for the banks to do that assessment. Yeah. So record keeping, ensuring that you utilize the account, and also just have a bankable proposal which the bank can look at and say, okay, yes, much as the transactions coming into account are a bit, if you look at the cash flow projections based on what they've brought to the bank, it is something the bank they can look at. So I think those are the things that the SMEs and the farmers should be able to consider.
And then to follow on that, do you think banks are too strict, or are businesses often not prepared enough?
I think this is similar to what I've said. Banks are not strict. They're just trying to protect. Those are depositors' funds, which they're using to lend out. So they are not very strict. They just want to ensure that there's prudent lending. We are lending to a business that will grow or be viable, or the facility will be paid back. So it's what I can say in a nutshell is that banks are not strict. They've got rules and regulations which they have to follow before they lend out. The issue is that a borrower needs to be ready. Like I earlier mentioned, use your account. Yes, give us a bankable proposal. All those things that I highlighted, they should be able to be put in place.
Amazing. And now that we've discussed the challenges, we've looked at what your institution does. Let's now look at the positive impact that access to finance rather can have. Can you share a real example where access to finance transformed a business or a farmer?
Yes, we have quite a number. I may not mention the names exactly because most of them are still active. I can highlight two in the agriculture sector. We have this farmer in Luano, who we've been supporting through one of our partner financial institutions. She has an outgrower scheme, and she has recruited quite a number of farmers. When we started dealing with her in terms of support, she had less than 100 farmers. You won't believe this, by the end of last month, our team went to just do a spot check in terms of what they're doing. She has over 5,000 farmers. And this has been facilitated because of the guarantee component that we have in support to the business that she does. So to us, that has created an impact in the sense that she's been able to expand, bring on board a lot more farmers, and also what we see is that in terms of production, it will be increased. And she'll be one of those big suppliers of maize to FRA through that particular arrangement that we have. That's just one of them. We have another one nearby in Rufunsa. He has a butchery. He started very small, also enhanced his business. He's bought equipment. He's now doing value addition. He's one of the big suppliers of sausages in the area. And he's also opened another butchery. So now he has two, and created employment. He had about 8. Now he has 15 employees. So to us, that is what we want to see. Empower a farmer or any SME. We see them grow, create employment, and also contribute to economic development because they pay tax and all those things. So to us, this guarantee scheme is really, really creating an impact. Yeah.
Okay, that's an inspirational success story, by the way. So we now move on to youth and opportunity. Young people are increasingly looking at agriculture and entrepreneurship as a viable career, but financing remains a concern. So what advice do you give to a young entrepreneur trying to access their first loan?
Our youth, our youth, our youth. Yeah, I've seen most of them are very enterprising. One thing that I've observed from the experience we've had many a time is that the few that have been supported, you find that sometimes they'll change use of the monies that they get. If I had planned to say I'm going to use this money for maybe involve myself in agriculture for a 1 hectare piece of land, maybe just half is used, the other half is used for other things. That is diverting funds from the intended purpose. What that does is that already that's a red flag because you failed to pay back the loan. If the loan hasn't gone or used to productive use, you can't pay it back because there's no return that helps you pay back the loan. So the encouragement to the youth is we need to plan And then when we plan to use the money for a certain project, we make sure that it's used for that intended purpose. And also in terms of learning from those that have been there before, mentorship, that is very important. If you're starting afresh, who else is doing what you want to do, so that you learn from them. They've gone through, they've made mistakes and they've learned from their mistakes. So as a new startup or somebody trying to do something new, you can learn from them. Because then you say, okay, he did this, he told me that I shouldn't do it. As a startup, you find that you don't repeat those mistakes. You do it differently. So mentorship, productive use of the capital, once you get it, I think that's very, very key.
Yeah. Amazing. And finally, as we come to a close, I just have one question. So if access to finance was fully solved, if that happened, what would Zambia's economy look like?
It would be, and almost, I don't know, surprisingly in Zambia, almost all of us are farmers in a way. I'm sure you also have a backyard garden. You may not be a subsistence, or now you can imagine if it's fully supported. We expect to see the GDP grow, increase, and to see rural incomes increase, and they contribute to the economic development of the country. So it would be a very rich nation. Look, we've got waters everywhere. Our weather pattern is so good. So and coupled with a mindset change, where if farmers are given monies, they supply the grain or whatever crop they're into, they pay back the loan. It is something that can improve the economic development of our nation. Yeah.
Amazing. Madam Mary Mumba, thank you so much once again. This has been a very insightful interview.
This is Agritalk Africa, the podcast that puts farmers first.